Good afternoon, folks. It seems there's never a quiet week. When I thought there's nothing much going to happen this week, we had all the trade deals sealed and signed and done, and then something else has to happen, right? So, Hiloni, tell us what's been happening
Sure.
in the markets.
So this week, markets remained under pressure. Last week, we spoke about the IT stocks falling. It still continues to fall this week, with the index falling as much as 10%. On the other hand, momentum factor has been gaining traction, with being up 2% this week alone. What has contributed to this is almost a 58% allocation to auto and BFSI sector alone. There's no dull week in commodity. Silver is corrected 1% this week in INR terms, and in USD terms, it was up 1.6%. Why the deviation? The deviation is because of the currency difference. USD was actually up 1.69% this week.
Yeah, so actually we had the DXY falling, the dollar depreciating a little bit and the rupee appreciating post the US trade deal. And in a depreciating currency, precious metals always do better. In an appreciating currency, it's the reverse. So even actually, if you look at decadal performances of silver and gold, you'll find that in USD terms, if you were an American resident, you would have seen more negative occurrences in silver and gold than in India.
Oh.
Because we have been a constantly depreciating currency against the dollar. So the currency movements matter a lot when it comes to precious metals. Yeah, and tech, oh my lord. So it continues to fall this week. I think all social media is filled with reports on how AI is going to take away our jobs, take away our livelihood, white collar, end of white collar, and so on and so forth, right? And things always swing extremes. Nobody takes a balanced, moderate view. And if you think about it, disruptions do happen. Okay, and this one was long in coming, but every disruption results in something positive. There's always a flip side to it. We tend to be pessimistic and look only at the negative part, but there's always a positive part. Okay, so because of this disruption, I'm sure more jobs will be created, more opportunities will be created. I'm sure there will be somebody who's using AI to make more money, to improve their profit margins, reduce costs, right? So that would be an opportunity.
Yes.
So while maybe somebody who's creating AI and creating infrastructure, spending too much capital on these, returns would be far to come, but somebody who's using it may be better. Let's see. Last year wasn't great for the users because there were very bad reports as per some of the big five agencies that nobody has really benefited from using AI. But AI has developed so quickly. It is developing so quickly. It is rapidly. Almost every week we have a new development which gives rise to new usage of the tools. And this whole downfall in tech stocks was driven by Claude's new tool, which allows coding to happen far more easily, and hence the worry on white job. But think about it. If a software services company is able to use these AI tools to program at a lower cost, who benefits? Is a shareholder of the tech company, right?
Correct.
Not the employee. The employee is the flip side here.
Yeah.
Okay. So there would be opportunities, and we have to keep our eyes sharp to see who uses AI to their advantage. Okay. And there was this very, very distressing article I read in Times of India a couple of days ago, Hiloni. Distressing in the sense, we've seen this happen in China. I did not think it was happening in India as much. And this article, this editorial was all about how young couples do not want to have children anymore. Did you read that?
Yes, sir.
Yeah. What do you think about it?
So it has a lot of truth to it, with living costs, educational costs being high, and even the inflation raising at around 10 to 12%. Raising a child has become really difficult. in this day and age where this generation is not able to buy a house for themselves, raising another human becomes even more stressful.
But all these years, our parents have raised us.
Of
What's
course,
different
sir.
today?
I think the core difference today is that now even women have to work. So there is an emotional burden of leaving your kid behind. Second is managing both together. Or third is even if you're privileged enough to take a break and focus on your household, there's still an emotional letting go of the career that you have built. So that becomes really difficult, and both of the parents working, who is taking care of the child, caretaking again is an additional cost and a worry because you're actually handing your kid and upbringing to another person altogether. Not necessarily that everybody has access to their parents, being able to take care of the children that they have.
Yeah. So I think the critical change has been women entering the workforce, and women being better educated today have all the world open to them to follow a career of their choice, and then it becomes an issue of career versus family,
Which it really shouldn't.
which I wish it shouldn't,
Yeah.
but that is the
Yeah.
hard truth. And if one has to follow a career, there's not enough time to raise kids. But there is the question of affordability. Okay? So we saw this happening in China last few years, that education became so expensive for Chinese youngsters. Chinese couples stopped having children, and the government had to intervene last year and put a lid on education costs and tuition costs. This, it has to be affordable, and we should motivate youngsters and young couples to have children. So I hope India also did try to get some regulation, because by oneself I don't think the private sector would think for society and put any cap on themselves.
Yeah, of course.
And we'll see this happen in different sectors, which we'll come back to. But don't you think spending patterns play a role?
Yes, of course. Spending pattern plays a role at the parent level much before your age of getting married as well. The moment you start earning, how you think about your budget, how you think about savings will really impact how your lifestyle gets shaped when you get married, settle down, have kids. So nowadays, everybody looking on social media wants to buy 10,000 rupee shoes or travel abroad as much as possible. But YOLO, as they say. But most of these influencers, all of them have sponsored trips. So you don't know what's their bank balance like. You're just following a lifestyle that they are choosing to show you. So they're choosing to show you a particular part of their life. It's not the full story.
Yeah.
And yeah, a
So
lot of
these-
pressures. Yeah.
These temptations are
Yes.
making youngsters spend more than they would have spent earlier.
Yes.
Right? These are all discretionary. They're not roti kapda makan types, but they're all about experiences and keeping up with the peer group,
Yeah.
and that pressure is a lot.
Yes.
And I think one should try to, as much as possible, not to get into that rat race of competing with the peer group. Try to think independently and do what is good for you, what is required for you. I mean, the importance of savings early, one cannot emphasize enough.
Saving as well as I feel a part of financial planning.
Yeah.
Like if you were saving, if the kid's parents itself were saving from day one, you wouldn't have to take an educational loan. Come if you want to send your kid abroad.
Very true.
And understanding your goals in life becomes very important, so you can work towards the specific goals and have a safety net as and when required.
So, financial planning can play a major role in getting your dreams realized. Is it not? If you are, I wouldn't say frugal, but balanced your spending
Yes.
and plan well in advance, you don't have to compromise on having a family or not having a family, is my thinking. I didn't have to take education loans for my kids.
Yeah.
Okay, why? Because I started an SIP so early in life.
Yes.
Thankfully, I'm in the same business. So I understood the importance of an SIP early on. And what I was preaching, I also practiced for myself. So I just have to liquidate my mutual fund portfolio and pay for the college fees. Whether it was Indian or American, it all sufficed. I didn't have to take a loan. Okay. You know, today happens to be Ekadashi.
Oh.
Okay. And what is the importance of Ekadashi is, I mean, it's a good thing that we are speaking about not giving into temptations. Ekadashi is not just about fasting. It's about controlling your senses. So hunger is one of the things that we want to control, but there's just one. It should be taken as an indicator, it should be taken as an illustration that we need to be controlling our senses and desires. And that is a key to controlling spending.
Yes. Delayed gratification.
Yeah, I mean, don't have the gratification at all. Don't go in for the gratification. Keep away from these things which are not necessary and keep your eye on the goal that you want and try to be more balanced. You know, cost of living is something that is creeping up upon us continuously, right? It's basic, it's fundamental, which people don't realize. And every time I speak to people, they say, what is the rate of inflation which the government says? Okay. If I go into the market or my wife goes into the market, she says the rate of price increase is far higher than what the inflation index seems to say. Okay. So today's newspaper talks about inflation indices getting revamped.
Yes.
Is it not?
Yes.
What are the changes that we are seeing in the inflation index?
One of the major change was having a different index structure, which allows you to look at food inflation separately, and you have a much higher weight to your services and other consumption spends. So just as a data point, if you want to see, Jan end number is at 2.8% versus 1.3% last month.
With the old index?
Yes, with the old index.
Okay. So I guess the government has really taken some effort to revamp the inflation index and bring it more in line with the consumption basket of today's Indian.
Yes.
Is it not? So the weight of food in the index has come down to 37% from 40 plus 46 or so.
Yes.
And the amount of importance given to services has gone up. And rural housing also. So these are elements that are brought in, and this is more in line with what the way we are spending day to day.
Yeah.
Is it not? That's good. And also food and energy, which tend to be very volatile. So in this case, food's weight has come down, which is good. I mean, many of the countries practice headline inflation, which is inflation minus energy and food. Okay. So in our regular CPI itself, if we're able to bring it down and bring it more in line, it's good. So yes, inflation is higher than the old index, which is a better reflection. And I know people keep griping and cribbing that the data that the government puts out is not believable.
Yeah.
It's not accurate. We don't believe it when the government says 2.8% inflation, because in their mind they feel inflation is much more. You see, what you are spending on day to day is only one part of the index. For example, you go to the market to buy groceries, that's only 1/3 of the index, not all the index. So you should realize that the index comprises so many other things which are hidden to us, which we don't feel on a day to day, but eventually impact us.
Yeah.
Okay, the index is an average of many goods and services, and whereas you are just looking at one part of it, which is groceries. But yes, the fact that we have been running a lower inflation than the previous years is borne out by even the private sector speaking about it, right? We had the Hindustan Unilever come out with the Q3 result.
Yes.
And they were better than expected, correct?
Yes, of course they were better than expected, but the key thing that the management highlighted there was the changing of macro situation right now. So one of which was obviously policy support through GST regulations, where the volume growth was really good over the long term. Also, he sees this going through. But the other thing was also the consumer sentiment, which is bringing in the demand, particularly in the rural markets. Lower overall inflation has also contributed to their volume growth, and they see a much brighter picture going ahead.
So you have the private sector also saying that lower inflation put more money into people's hands to be able to go and consume other goods. And so you had a 4% plus volume growth for Unilever. Unilever is not a small company, right? They had a turnover of almost 15,000 crores last quarter.
Yes.
That means they're selling almost 60,000 crores worth of goods a year. they do have an inkling of a grip over what's happening in both urban and rural areas. But coming to inflation, yesterday I was speaking with a client of ours, a high net worth client, and his crib was that the cost of medical services is shooting up so rapidly. Which is right, if you unfortunately happen to have a medical condition or a fever or some test to be done, you walk into a clinic or a hospital, you see money flying out of your pocket. If you have health insurance, which by the way each one of you should be having, all right, if you don't, get some immediately. You can go out of pocket so quickly. Okay. The cost of specialist consultant is anywhere between 1,500 to 3,000 or 4,000 depending on which city you're in. Bangalore may be a little lesser, Mumbai will be much more. Okay, and the cost of testing, and if you have to get admitted into a hospital, then the bill really piles up. Even without a surgery, you can come out with a bill of a couple of lakhs.
No.
Okay, of course, all studies have shown that medical inflation is going up at the rate of 14 to 15% per annum, which is, look here, we are talking about CPI at 2.5% and medical inflation at 15%. Look at the kind of. So if you're not sufficiently planning for a higher rate of medical inflation or higher medical expenses in your budget, then you're going to be in trouble. And you wish that you had spent more time remaining healthy than eating junk food and not exercising. Right? And what is scary, Hiloni, is that as the healthcare sector gets more and more owned by private equity funds, healthcare is going to become more expensive for us. Because private equity funds are just focused on profit margins. It doesn't care, it doesn't have a human face. So as long as they're going to make their ROI, they're not bothered as to how much we are paying and how much we are suffering.
So a good medical service becomes almost inaccessible to majority of the population in that sense if you have not planned accordingly.
Yeah.
So
how much do you think private equity has invested in healthcare in India?
A couple of $1 billion. There were big investments happening last year as well.
You're right. The last year has seen about $5.5 billion.
Wow.
But if you look at a 5-year perspective from 2020 onwards, almost 90 to 95,000 crores has been invested by private equity into Indian healthcare and hospitals alone.
90,000 crore.
Yes, I'm
That's
talking
a big
hospitals
number.
alone and not the allied services
Diagnostics,
like diagnostics or anything else. And this is only going to go up because everybody has their eye on Indian healthcare systems. Because of the huge population
Yes, of course.
and the growing prosperity, we all are going to spend more on healthcare and eat more junk food.
Yeah, so lifestyle diseases follow.
We are the lifestyle disease capital of the world,
Oh, damn.
whether it is diabetes or cardiovascular diseases. So people, please watch out, stay healthy.
Of course.
Right? But having seen HUL's Q3 result, how have Q3 results in general been, Hiloni?
So Q3 results have fared much well than what we expected. So I have some numbers here. So currently 456 companies have come out with their numbers out of the Nifty 500 index. There is a 11.6% year-on-year revenue growth and an adjusted PAT growth of 15% year-on-year.
Wow.
And almost 51% of the universe have reported 15% plus of earnings growth. The large caps have reported 13% PAT growth. Mid caps have reported 16%. Small cap is where the kitty actually has reported 32% of PAT growth.
Wow.
That none of us actually expected.
Yeah. So that way Q3 results have been much better than expectations, and much of it is driven by the higher volume of offtake and better revenue growth in Q3 for whatever reasons you could ascribe GST cuts, income tax cuts, and so on and so forth. But the outcome is that businesses did better in Q3. We are hoping this sustains, and if it does sustain, I think our stock market could give you a better return this year than we had previously anticipated. So when we say that small cap and mid cap profit growth was good, let's remember that the price earning multiples are much higher than the profit growth.
Correct. Yeah.
In most of the cases. So it's not that you have to, think that, wow, this is a high growth area, let's buy small and mid cap immediately.
Yes.
Their valuations remain high.
Yeah, it's very selective stocks which have been able to deliver good results with a cheaper valuation. So
Yes.
it's a very selective process right now in the small and mid cap index.
Or where there is some visibility of a high rate of growth, so that you don't mind buying a high price earning multiple for
Your PEG growth is actually better.
Yes. And of course, momentum as a factor has done well, as you pointed out, largely because it has banking and finance and automobile. Almost, 2/3 of
Yeah.
momentum is made up of these two
60%,
sectors,
yeah.
which have been doing very well. Right? Not just the last 1 week or 1 month, the entire year, these two sectors have done very well. And quality has not done as well. And low wall, which was excellent performer the previous periods, will not do well because it has a lot of IT.
Yes.
And tech has fallen, so one can anticipate that low wall will not have good outcomes in the near future till these things recover.
Yes.
Either there's a rebalance or tech recover. Of course, the rate at which tech has been falling, I'm sure at some point of time will become attractive too for those who are able to discern and discriminate. So it's not a general, please don't take it as an advice to buy IT. No way. Okay. It has to be analyzed well.
So talking about returns, bond fund returns in the last 6 months have given less than 4%, whereas one generally expects around 6 to 7% from bond returns. What's your take on that?
Yeah, it has been out of the ordinary that at a time when Reserve Bank has been cutting interest rates and bond prices should have gone up, giving us an additional gain, interest rate, the coupon plus a capital gain, we would have at any point of time thought we would have got a much higher rate of return from debt funds in this period, but the opposite has happened. And I think one needs to go back a year at least to figure out why this is happening. So right from the time in the earlier budget that we had income tax cuts, markets became a little fidgety, saying that if the government is losing revenue on the tax side, they have to borrow more to finance expenditure. And that is when bond yields actually started becoming a little tighter. Okay, and did not respond to the Reserve Bank's interest rate cut. So after that, we had the GST cut, and actually beyond that, if you look, the lack of an Indo-US trade deal had brought sentiment down so much. We had a lot of foreign investors pulling out money. We had foreign investors pulling out money. We had a lot of new public issues and public offerings and private equity funds taking their profits out of the country. There was a big strain on the rupee. So at a time when you had the dollar depreciating against most of the world currencies, the rupee did not appreciate. We depreciated 10-11% against the dollar, which was horrible. And that was only because of this pressure of outflows. We didn't have inflows, we were having outflows. So this was a cash flow situation, if you might pardon me for saying so. Okay. And when the rupee falls a lot and the Reserve Bank has to intervene to defend the rupee, and in the process, by offering more dollars, they are pulling out rupees from the system and removing liquidity. So when you have low liquidity or tight liquidity, interest rate policy transmission doesn't happen. So you had tight liquidity because of currency issues, and because of tight liquidity, bond prices did not go up, bond prices fell. Okay, interest rates hardened for the corporate. So actually the corporate yield curve is much higher than the government yield curve because there's no liquidity.
Yeah.
They've had to borrow at higher rates than anticipated.
Yes.
This has been the problem. But I would also say that given that the sentiment is better now, okay, and if this trade deal really lifts sentiment and strengthens the Indian rupee, you will see flows coming back in. So you'll have a reverse. So you will have, the Reserve Bank will not have to suck out so much liquidity to defend the rupee, and we'll have a better environment for rates, hopefully, assuming that everything else remains under control.
So next 6 months looks better?
I think the next 6 months will look better than the last 6 months because we have, as a starting point, we have a higher yield and less volatility, hopefully. Okay, and I think it's okay to be a little optimistic on the next 6 months return or the next 1 year's return from bond funds in this case. Okay.
Talking about volatility and returns, if you look at global markets return, the ASEAN index has gained 25% in the last 1 year. Main contributors being Brazil at say 50%.
Of course, Brazil comes under EM and ASEAN has Korea.
Correct,
And
but
Taiwan.
emerging. So Korea itself is up 113%. Japan is up 40% versus US being only at 11%.
So the last year, I think the US, which has been the most popular investment destination, ended up at the second last position. Okay. The last position was reserved for the Indian markets. I don't think the US realizes or understands the importance of India. If it wasn't for India, US would have been the bottom of the heap.
That's true.
So we sort of held the bottom position and allowed US to take the second last position. Yes, emerging markets, Asian markets, the general sentiment has been non-US market. Okay, everybody were worried about the tech risk in US, and then it played out. We saw the crazy crash of tech stocks over the last few weeks, driven by something. You need a trigger to get off high valuation. And this trigger was the Claude CEO making a statement about AI, right? So something needs to trigger it. This was the proximate cause, I would say.
We've been seeing it for a long time, right? I think early last year is when we came out with a note saying that we want to reduce the exposure to US tech and move it to emerging markets, ex-China.
Yes, correct. And even though that time we thought of saying ex-China, even China is looking attractive.
Yes.
With the low valuations and a vibrant technology sector there. Korea has done well. Japan has done well for other reasons, because you have a much stronger Japanese government. The Japanese Prime Minister is known for her policies now, and we are having a stronger yen. Tax cuts expected for Japanese, which will boost consumption. So the Nikkei has moved up sharply. It is only India that has not responded, and US. Okay, so US has two stories going on. Okay, one is a sell US story going on, and the other is a buy US story. All right. Two different stories going on, but in different sectors. So while US equity funds have seen net outflow, okay, in favor of Europe and emerging markets and Asia, okay, you've seen a drawdown. And if you had been reading the newspaper headlines or the social media headlines, everybody screaming about de-dollarization and investments going away from America, financial investment, and about people dumping US treasuries, right? And people get scared reading about it.
Yeah.
But then when I went ahead and I was digging the data a couple of days ago, looking for evidence, I saw the contrary. And the contrary evidence is this, that actually there have been inflows into US bonds. There are more foreign investors buying US treasuries than was thought. If you just had to look at the month-on-month data for the last 12 months, it shows that more money has come into US buying treasuries, while social media has been screaming something else. That is noise.
Of course.
Look for data to support any assumption. And it, of course, amongst the countries that have been buying, it has been mostly the allies, UK, Canada, Japan, and France. Yeah, Canada too, even though they've been screaming against Trump, they've been buying US treasuries. All right. And the others are allies. The ones who have been reducing positions are China, Brazil, and India. Among the large nations that have been reducing their positions in US treasuries. But net, there's been an inflow. And with the equity market weakness, you'll find US treasuries being more in demand. It's the same, risk off, risk on.
Sure.
Okay, when there's a risk off mode, people buy more treasuries. When there's risk on, they buy more equities. So you will find this happening. But yes, don't believe everything that you read. Ask for confirmation. Look for data to support whatever is there. There's so much noise out there. The real picture is different than what media will have you believe. So let's keep that in mind when we look at all this.
Definitely. Yeah.
Okay. Yeah. So that's all for you folks. I hope it's been interesting listening to Hiloni and me, and more than interesting, useful. Have a good weekend. Thank you.